Every time the market crashes, the same simple 3 mistakes happen. Same traders, same reactions, and the same blown accounts every single time. If you ever lost accounts, blew your funded challenges during a volatile market, this video might be for you. Let's hop into the charts. The thing is, guys, the market does not care about your account. The market also doesn't really care about your entry and your analysis. When volatility hits the market, the only thing that really matters is how you gonna react to this volatility. And most traders react the same wrong way. 3 mistakes, let's go through them. Mistake 1 is, guys, you try to catch the exact bottom. And the problem with that is, in reality, no one really knows when the exact bottom hits. Right here, for example, market dropped 5% in a few hours. RSI is oversold. Everything looks like it's bottoming already. But in reality, as you can see, everybody that just longed here blindly got wrecked and got stopped. What happens after they buy? Market drops another 5%, 6%, even though it already looked so bottomed right here. And what they do after that is probably average down again. They try again because they think at some point the bottom has to be in. And this is a complete wrong approach to trading, guys. Catching a falling knife is not a trading strategy, it's just gambling. What we should do, in fact, instead of catching the bottom, we need to wait for confirmations. You need to know about market structure, and market structure right here is exactly this high brought us to this low. So this would be confirmation for me that we could see some downturn again and we could eventually shift market structure bullish. And after this move, I am starting to look for entry. Let's say we're gonna pop above here. This is then a confirmed shift in structure. And then I'm waiting for retracements into interesting areas for internal structure shifts again. And then that's my confirmation, guys. And that's when I start longing or shorting, whatever. You can take this concept to all markets, to longs or shorts. It doesn't really matter, but it is important to wait for confirmation. Then mistake 2, guys, they revenge trade. You took a loss on the way down and now you're emotional and you wanna obviously make the loss back. That's just how we are as humans and how we are programmed. And then you start forcing trades just to make the loss back. And this is when one bad trade can become a spiral of bad trades and it will lead to your account getting breached. Maybe you're lucky one day, but at some point it will happen. I can promise you that. And revenge trading is never a good idea. I've seen traders lose 1 or 2% on a legitimate setup and then they lose 8% because they started revenge trading and the whole account is gone just because they got emotional. And the reality is the markets are not at fault here. Just you are at fault and your system is at fault and your emotions. What to do right here, guys? I always have a daily loss limit. I got my 1 trade a day on my NQ system, for example. And if it hits my stop loss, my -1%, -2%, whatever I risk, I stop trading. I wait for the next day and I am really strict with that and I never revenge trade ever. I did that way back then as well, but at some point I took my daily loss limit and I stick to it. I stick to my rules and that's what I do. And that's what I recommend to have you as well, to have a daily loss limit. And once you reach the daily loss limit, you step away and you are not trading anymore. You can do something else, go to the gym, do something for your health, I don't know, cook a nice meal, go out to shop a little bit, whatever, but don't revenge trade. The market will always be there tomorrow as well. Then mistake 3, guys, they change their system just because they have a bad luck or a bad losing streak. And yeah, they believe after that their system is broken, which is also one of the hardest factors as a trader and that is holding people back from being profitable over the long run. They face a losing streak, 5, 6, 7 trades and they think everything is broken and they throw it out the window and start trading another system and then the spiral continues. Right here, for example, I have an equity curve. It's only theoretical, of course. The system runs, you have wins, you have losses, but overall your losses exceed your win. But overall your wins exceed your losses. And then this downtime period comes where you lose 5, 6 trades in a row. That's when people start messing up. They think the trading system is broken, it doesn't work over the long run, and they throw it all out the window, they try something else, and then it happens again. But what in reality was this? This was just a little downside on your equity curve, guys. And if it would have just stick to it consistently, overall, if you zoom out again, you would have made back your losses and more, and you end up in profit again. And that I've seen it countless of times. It's always the same. It's the same for my trading system. It's the same for the systems of my students. You have to just stick with it. If you know it works long term, just stick with it. Just because you lose 5, 6, 7 trades in a row, it doesn't mean that your system is broken. Because when you go out the way and you think your system is broken, you switch it up, you're destroying the only thing that makes your edge real. and that is your consistency. And with consistency, we can find our edge. And if you hop from one system to another, it's impossible to find that consistency that gives us our edge over the market. So if you hit a couple losses, what to do after that? You do nothing, you just stick with it. Doing nothing is most of the time or sometimes one of the best choices you can do as a trader. We are performers, guys. We are not working on an hourly base. It's not that the more time we put in, the more money we make. Of course, in the beginning, when you start out, when you learn, that is the case. But at some point, I compare it to being a performer. Out of 24 hours in a day, you perform for 1 hour of the day. And in that hour, you have to be locked in. And that's it. You don't need to do much more than that. So those are the 3 mistakes that I see traders doing during volatile markets or during downside periods. And if you need help with all those things, if you need help building a trading system, I am offering you a 6-month mentorship. You can send me a DM on X or on Instagram, guys. We have a little chat, see if it's the right fit. It's very limited as well, not working with everybody. And if you are interested, hit me a DM. We have a little chat and I can make you become a profitable full-time trader in the time span of 6 months. So yeah, hit me up if you're interested. And thanks for watching the video, guys. If you learned something, leave a like, comment, subscribe, and then I see you in the next one, guys. Peace out.